Let's unpack some of the markets now, with Japanese shares powering to a new 27-year high today after the US and Canada clinched a long-awaited trade deal. But other Asian equity markets struggled in subdued holiday trading. Tokyo's leading Nikkei finally crossing above its record level, having flirted with the mark on Friday. Traders began to shrug off disappointing business confidence data and a weekend typhoon that shredded the country. Tokyo was up 0.5% to 24,245, while Hong Kong and Shanghai were closed for holidays. Wall Street ended flat on Friday, it seems, as gains led by Intel, real estate companies and utilities were offset largely by Facebook after the social network disclosed yet another security breach. The Dow Jones Industrial edging up to 26,458, with the S&P 500 mostly unmoved at 2,913 points. The Nasdaq Composite adding 0.05% to 8,046. Well, not much impetus there for the market, as it would seem. Even the local market not doing as well as one would have hoped, considering that all of last week's shortened week was in the red. We are continuously down for the year, just over 55,000 points as well for the all share. The rand doing a little bit better, but with that, let's unpack the rest of the local and European markets. Well, the FTSE 100 did slip there on that front, with the CAC 40 and the DAX also going down ever so slightly. So, as I said, not much impetus on that front. So we'll unpack just how things are looking there. Gary Boyson joining us from the JSE as we continue to unpack the markets and how things have stemmed all across the board today. Gary Boyson, it is mostly flat if you take a look at the market today, but there is some green tinge, and perhaps we can keep that sustained for the remainder of the year.
Yeah, let's hope so. I mean, last week was a little bit tough. We had a couple of big down days, but obviously, as you mentioned, a little bit of subdued trade today, mainly because we've got the Chinese markets closed for the week. That's the golden holiday week. We've also got Hong Kong closed just for today, which is obviously, we've seen no trade in Tencent, which is obviously a big contributor to the movements in one of the big heavyweights in our index, Naspers. That market closed for National Day, so that taking a little bit of volume out of the market. Naspers is down on the day, just kind of drifting lower. That may be pulling the index a little bit lower. I saw Aspen and MTN making some recoveries. MTN obviously, being punished after the announcement of the concerns around the way that they repatriated funds from Nigeria, and I think the market getting a little bit more optimistic that we'll see a positive resolution there. So that also helping to lift the index and just flatten things out slightly. No major moves in the currency, so yeah, just a quiet day on the market.
Let's continue to touch on Tencent, and by inference, then we go to Naspers. Really, Tencent is saying that they want to at some point announce new management team and new leadership, perhaps for future as well. Do you think that'll have a severe impact on Naspers, particularly if it's somebody the market doesn't necessarily agree with?
Again, you look at the scope of the Tencent business, and absolutely, Pony Ma has been fantastic for it. But if you look at the business, I think what's really got the market concerned at the moment is really two factors. So one is the changing regulation in China. So any new management structure, I think the market will look very closely at what their relationship is to the governing authorities in China, and what their impact could possibly be via lobbying on legislation, because the potential ban on games in China is significant, and it's going to detract from Tencent's earnings. At the same time, the other concern around, I suppose, Naspers is really the structure of the holding in Tencent, and whether they are going to be able to sell that holding down further, or unbundle things like multi-choice, which they've announced, and try and basically narrow the discount that the shares in Naspers trade to their counterparties, Tencent. So I think those are the two big issues on the stock. Overall, we'll have to see what the management changes bring, but it's buying Naspers is still a fantastic way to enter the Chinese markets for a lot of investors.
Do you think that Naspers is going to be trading a little bit tentatively as we await that multi-choice split beginning, or I think early next year?
Yeah, so if you look at it, there seems to be a solid level at around 3,000 Rand a share. We've sold off to that level a couple of times. We're hovering around that today again, but there seems to be buying coming in at that level. If you look at the consensus forecast and the sum of the parts valuation that most research houses are putting on the stock, we're still seeing plenty of valuations north of 4,000 Rand a share. And again, it really comes to narrowing that discount and trying to value all the additional businesses that are still inside the Naspers stable. So obviously with the spin-off of MultiChoice, I'd expect that to be very positive for the stock, as the market, even though it is a declining business, it's obviously got very, very fierce competition from the likes of Netflix and the online streaming services. But at the same time, this business does have a value, and should you then see that business listing separately, which is the plan, there should be an immediate unlock for Naspers shareholders, as the value of Tencent, would remain the same, and essentially the remaining Naspers shares would have to be bid up.
Yeah. Gary, let's chat about oil now as well. Firmly above that $80 a barrel mark, or at present around 83 Rand odd a barrel. The fear now is 90. And from 90, we could head even higher, So those fears continue to abound. Do you think we get to a point now where oil is going to perhaps not normalize, but continue on its upward trajectory?
Yeah, certainly, and 90, there's plenty of analysts banding around $100 oil and triple-digit forecasts in the not-too-distant future. Now, a lot of this is, again, it's coming partly because of the Iranian sanctions from the US, but also, obviously, the recent OPEC meeting where we saw that Saudi Arabia was not going to increase production in the face of what is increasing demand. So you're seeing that supply-demand equation getting a little bit out of kilter, and that helping to lift oil prices, especially in the context of those sanctions. Obviously, that's not great for South Africans, certainly, and I mean, we're starting to feel that not just from the weaker currency, but because we are an oil importer. But with the higher oil prices, we're obviously seeing that record petrol price hike come Wednesday. Yeah,
we saw better than expected trade numbers come out as well. Last week, we expected it was meant to be a loss. It came out as a massive surplus of around 8.5 billion odd or so. The Rand should have reacted a whole lot better to that, but currently at 14.09, I know it's anybody's guess whether it'll get below 14 Rand or not. But are you seeing some strength come back to the currency?
Absolutely. I mean, it wasn't too long ago we were sitting up at 1470, 1480. So if we look at the technicals, we see a big level around 14. It does seem to have traded down to there on Friday. It's reversed slightly today. Still a little bit choppy. But if you look at fair values and you look at a PPP model, which is a purchasing power parity model, really comparing what goods cost in South Africa compared to what goods cost overseas, we see the fair value at around 1370 at the moment. But obviously with the pessimism, we obviously got ABSA PMI numbers out here, with our economy continuing to struggle, with growth forecasts continuing to be depressed, with the unemployment situation, we do see a risk premium in the currency as well, and certainly, I mean, we're feeling it from client flows as well. There's a lot of appetite to move currency from South Africa into international destinations, and that obviously putting pressure on the local currency as well. So at 14 Rand to the dollar, that to us seems like a fair value. 15 Rand looks a little bit too weak. As I said, while the absolute fair value is 13.71, that doesn't quite take into account the risk premium. So I think sticking around 14 is probably a decent guess at this stage without any material changes.
Gary Boyson, Portfolio Manager at Rand Swiss, appreciate your time this afternoon as we unpack the markets as well. Seeing a slight bit of positivity at 55,740. That's the state of the all share, and that's where the buck stops this afternoon as well. Nzinga joining me right after this. Do stay tuned.